Hello, and welcome back to the channel. My name is Zach Collins, and this is Financial Education. So on the last video, I introduced you to ETFs. Now today, what we're going to do is something a bit of a similar topic, but it's a different product type, and that is managed funds. If you've been watching videos or content from other, say, US-based content creators, they would call this sort of product a mutual fund. Now, managed funds and mutual funds, they're essentially the same thing. It's just a different name. It's just like in Australia, we use the word thongs instead of what the US uses flip-flops, but they're interchangeable. As I said before, so managed funds are very similar to ETFs. Now, if you watched my last video, I introduced you to ETFs as basically a bundle of shares, a hamper basket. Now, managed funds, they can be considered to be exactly the same. They're also a bundle of shares. Now, the big difference between them is basically who you buy them from. The best way that I can think of to explain this is think of a farmer's market. You've got a range of vendors. Someone sells apples, someone sells lemons, someone sells limes. You get the point. Now you can buy apples. Now, instead of buying directly, from the farmer's market, directly from the grower themselves, you go and buy from someone outside, some random person off the street. Now, when it comes to the stock market, you're not talking directly to that person. So you're buying and selling with that person, but there's a middleman in the middle, and that's the broker. And they make that transaction quite seamless. That's how ETFs are transacted. So they're bought and sold with strangers on the open market. Now, managed funds are different in that instead of a guy on the street, you're buying and selling directly with the fund manager. You're talking directly with the apple producer at the farmer's market, and you're buying and selling directly with them. Now, BlackRock and Vanguard, they're the two biggest fund managers in the world. BlackRock mostly deals with institutional investors, and Vanguard's got more of a tilt towards retail investors. Now, I'll make a bit of another video in the future that kind of explains the difference between retail and institutional investors. So make sure you guys stay tuned for that. So both BlackRock and Vanguard, they offer managed funds as well as ETFs. So, in the example I'm about to give you guys now, think about either of them, they're basically interchangeable. Now, both of these companies make ETFs that have the exact same managed fund equivalent. So tracks the same market, it's identical, it's just one's an ETF, one's a managed fund. They also make ETFs where they don't have an equivalent managed fund. And they also have managed funds that don't have an equivalent ETF. So if you wanted to invest in a specific target market, doesn't really matter what it is, something very niche, sometimes you're restricted to one type of investment over the other. Now, let's say you got $1,000 to invest, and you want to buy something that has both a managed fund version and ETF version. Let's say the ETF costs $70 per share. So with your $1,000 investment, you can buy 14.285 shares. As I said in my last video, ETFs, you can't buy fractionals if you're doing chess. Let's assume you're using chess. So you can't buy fractionals, so you buy 14 shares. That costs $980. And then let's say brokerage. Now brokerage depends on the broker you use, but let's just say it's $10 just for simple math. So it costs you $990 total, $10 in brokerage, and you got $10 left. That's just sitting in cash, it's not invested. Now, if you were to use the managed fund version, there's a few differences here because you're buying directly with the vendor. It doesn't matter what the product manager is, if it's Vanguard or BlackRock, or there's hundreds of managers, it could be anyone. But you can buy fractional units. Now, each unit tends to be a bit cheaper. So instead of $70, you could be paying between $1 and $10 normally between per unit. And that depends on how many they've created and the market cap. So now, as I said last time in my ETF version, just because the price is different, it doesn't mean one is better than the other. You may hold more units, but if the underlying holdings are the same and the amount invested is the same, whether you got 1 unit or a million units, it's the same. You'll get the exact same return. Now that I've got that said and done, let's see what would happen if you invested in a managed fund. So let's say it costs $1.50 per unit for this managed fund. So with your $1,000, you can now get 666.67 units in this managed fund. Now, every single dollar is invested, there's no brokerage cost, and there's no residual cash balance. While there is no brokerage cost, with managed funds there is a buy-sell spread, and if the fund is super popular, it can be as low as about 0.01%. If it's a niche product and not much market movement, it could be about 1% spread. So what does buy-sell spread mean? It means the difference between what you buy versus what you can sell it for that fund. So let's say it's $1.50, you may buy it for $1.52, but to sell it, it's $1.48. Now, look, these numbers are just random numbers that have come off on the top of my head. When you do start investing, do make sure you look into the specific product, look at how much each unit costs you, what the buy-sell spread is, and all this sort of stuff, because it can vary between funds. So the final main difference between managed funds and ETFs is around how you treat reinvested distributions. So I'll be making a bit of a future video on this topic as well. So please be mindful that whether you take the dividends as like a cash payment to your bank account or you reinvest it into the fund itself, it's still taxable. So how does reinvested distributions between ETFs and managed funds differ? To do this, it's actually best if we go back to the example I just talked about. Let's just use the ASX 200 for example, because that's the local market. The ASX 200 gives a general yield of about 4% each year. Now, obviously it differs year on year. And so most funds, they will distribute to investors either on a quarterly basis or a semi-annually basis. That's 4 times a year or twice a year. Now, the amount that they pay out each time can vary a lot, depending on which companies within the fund paid out a dividend. But just for simplicity's sake, we'll just assume that the payout is a flat 4%, and each quarter you get like a 1% payout. So when you invest that $1,000 in the ETF, you've got 14 units and they cost $70 each. Because you can only buy whole units, in order to get the distribution reinvested, you need $70 in distributions, in income. Assuming each quarter you get 1% paid out, that's 70 cents per unit. So for 14 units, that's $9.80. Now this will take you 8 quarters or 2 years to get enough cash distributions in order to be able to reinvest into one new unit. So it'll take 2 years to go from 14 units to 15. If you were to hold the managed fund equivalent, so you've got 666.767 units at $1.50 each, and you can buy fractional units. So the 666.67 units, that will give you $10 payment. Now, this is slightly more than the ETF, about 20 cents more, because the whole $1,000 was invested, versus with the ETF, you only invested $980 due to the cost per unit and fractional investments being possible with managed funds. Now, with each unit being valued at $1.50, means each quarter, you'll get another 6.67 units. Because with the managed fund, you're able to get new units each quarter. These new units, they will also start paying you out a distribution each quarter, 1% each quarter as well, 4% for the year, and this speeds up the compounding returns. Now, check my channel in the future, because this is another topic I've got to work on, where I'll be doing a video dedicated to how compounding returns work. Now, hopefully I've been able to give you a bit of a better understanding of what a managed fund is and the difference between managed funds and ETFs. If you do have any more questions, please feel free to drop a comment below and I will answer if I can. Thank you so much for watching, and I'll see you guys in the next one.